Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the daily time frame with the impulsive scenario from 24K to where we are now, where we're looking for a wave 5 to finish. Most common target for 5 is between the 1.236 and the 1.618 Fibonacci, taken from the high to the low of this wave 4, giving you a target area between 51.6K and 55.6K, after which we expect a bigger structure to the downside. In a bullish scenario, that structure to the downside is then part of a wave 2. Here we're looking for wave 1 to finish according to the impulse that I just had on my chart. Then we look for a deeper corrective structure in 2, where the common target area for your wave 2 is between the 0.5 and the 0.786 Fibonacci, taken from the low to the high that we have at the moment, giving you a target area between 36.3K and 29.2K. The 886 is a rare target for a wave 2 at 27.1K, and the 382 is a less common target for a wave 2 at 39.7K. From a time perspective, preferably this wave 2 is ending after the 0.382 Fib time, taken from the low to the high, which is currently positioned on the 21st of April this year. Now, inside this target area for wave 2, we also happen to have a weekly gap. Over here you can see price made a high, moved to the downside inside this weekly gap, and it acted nicely as support. Now we are at resistance, another weekly gap here where we already closed a weekly candle in the gap, and the high of the gap is at 53.3K. Above price, we have another weekly gap between 59.5 and 62.3K, which is an important one as it is the final one before the all-time high. And to the downside, we still have this gap over here between 34K and 30.3K. Now, the most bullish scenario is that we already have a finished double 1-2, where we have a wave 1, 2, and then a 1, 2, 3, 4, 5 is already finished. The second wave 1 is in, but also the second wave 2 is in, hitting the 382. Now, as mentioned, the 382 is a less common target for a wave 2, and also this wave 2 over here in a double 1-2 scenario, 1, 2, 1, 2. This wave 2 also went to the 382 Fibonacci, so that is also again a less common target, right? So that lowers the probabilities that it happens twice. Also, this wave 2 is incredibly short in time compared to the wave 1 to the upside, not hitting the 382 Fib time, taken from the low to the high of wave 1, which is also very uncommon, and also in comparison to this wave 2 is very, very short. Nonetheless, we are looking for a rejection, which is pretty much the same. Move a bit more to the upside, and then look for a corrective structure down. The only difference now is that we don't want to see this low taken, as we are looking for a 1, 2 and then a continuation to the upside, instead of looking for a bigger retracement to lower prices. Of course, a 5-wave impulsive move to the upside here, 1, 2, 3, 4, 5, can also still end a wave C and then a bigger A, B, C to the upside. As long as price is not taking the all-time high, pretty much this scenario is still very much valid. Yes, we are now ranging above the 1.618, taken from the low to the high of A to the low of B. It does lower the probabilities a little bit for an ABC scenario. However, in the wave C, we are looking for a 5-wave structure, and that is still an option for then much lower prices to come. So in pretty much all of these scenarios, what we're looking for is a bit more upside and then a retracement to the downside. Most bullish is then another wave 1, 2 continuation. On the second place, we have a wave 1, 2 and continuation. And finally, then we have the most bearish scenario, where we are looking for continuation to the downside. It very much depends on the retracement we're eventually gonna get. On the 4-hour time frame, we're looking at this impulse 1, 2, 3, 4, and then finally a wave 5 to the upside that eventually starts the corrective structure to the downside. The most common target area for a wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of wave 3, giving you a target area between 50.3K and 47.3K. The 618 is an invalidation at 46K, and the 146 is a rare target for wave 4 at 51.2K. Also important is Fib time. Over here, the vertical lines are Fib times taken from the high to the low of 2 and put on top of the high of this wave 3. You can see that price is now ranging behind the 3 Fib time, meaning that this structure over here is 3 times longer than wave 2 at the moment. That is no problem. However, If we are looking for price to still enter this area, time is running out because preferably a wave 4 is not reaching the 5 pip time here, which is sitting on Friday this week, 1 a.m. in the morning, Central European time. Also, the probabilities in this range more locally are higher. We're going to take the highs first before potentially the low. In that case, we're looking for a potential flat structure, but that means price still has to move to the upside, then to the downside, and then up once again. So ending this wave 4 preferably before the 5 pip time becomes a challenge if we first have to take the highs and then eventually move down to the lows. If price takes the lows before the highs, the probabilities increase for continuation to the downside. On the 4-hour time frame, the more bearish scenario here would be a flat structure where we are looking for a wave A, B, and eventually a wave C to the downside. After this wave C, we're looking for continuation to the upside. In this scenario, preferably, this is your high and you're already looking for a move down. The common target area for a wave B is between the 1.236 and the 1.38 Fibonacci taken from the high to the low, giving you a target area between 51.6 and 53.1K. The 1.618 is less common. However, if we're going to move towards the 1.618, this very much becomes a 5-wave structure, another 3-wave structure, and in a wave B, we are looking for a 3-wave structure, namely then an A, B, and a wave C. In this scenario, preferably the end of your wave C is in and you're going to be looking for a move to the downside. As you can see, price is ranging between the 1.618 and the 2, taken from the low to the high of A to the low of wave B, which is less common for a wave C. The 1.618 is usually still a target for a wave C. It's absolutely still a common target, but the moment you pass the 1.618 and eventually starting to range above it, it lowers the probabilities for a wave C compared to an impulse 1, 2, 3, 4, 5 to the upside, and therefore it also lowers the probabilities for the flat scenario. On the 1-hour time frame, we do have some CVD divergences. We have bullish CVD divergences here. When price came to the downside, we have bullish CVD with an order block on the 30-minute here. Higher low in price, lower low on the CVD. Target is the high. But also here overnight, price moving to the downside and with this low created bullish CVD divergences. Higher low in price, lower low on the CVD. As price now moved to the upside a little bit, we also have some bearish CVD divergences here, lower high on price, higher high on the CVD, which is invalidated the moment price takes this high. And if we look at the probabilities of the different scenarios, and on the daily time frame, probabilities are at the moment highest that we are looking for a wave 5 to end and a corrective structure to the downside, which can lead to both a bigger wave 1, 2 and continuation in the bullish scenario, or the bearish scenario where wave C is in and a move to the downside. However, the bearish scenario with an ABC currently has some lower probabilities as we are now ranging above the 1.618. The reason that this scenario here doesn't have the highest probabilities in a wave 1, 2, 1, 2 and then another 1, 2 is also because of volume. Besides this wave 2 being very short in time and price as explained, we don't really see the volume picking up, which is something we like to see as now we are in a wave 3 of a bigger wave 3. On the 4-hour chart, probabilities at the moment are higher for a impulsive structure 1, 2, 3, 4, 5, where we are looking for the local highs to still be taken sooner or later. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.